you know we got to read that disclaimer first. All right, so disclaimer disclosure. Please note that the following is not legal advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in loss of your entire investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. The information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence and research before making any investment decisions. All right, so now that we got that out of the way, let's jump into the recap for this week. So, all right, so hopefully, I know the camera's kind of wicked, kind of funky, but hopefully y'all can see this. So this week, officially Friday to Friday, the first full trading week of December 1st to December 8th, I made just under $500. I'm trying to get the camera angle just right so y'all can see it, but made just under $500. I did one, two, three, four, five, six, seven, eight trades. So eight trades, 500 with an average trade of 2,050 bucks. So I'm going to bring this over here so y'all can see. But not only do I use TradeZella, I also use my own Excel as a trading journal. So I recommend everybody doing that. But I want to get into it, and we're actually going to work our way backwards. So we'll start off with today and go backwards with the rest of the week in terms of my trading. So today I did one trade. It was a SPY call, and really it was just based off of momentum. And it was after 7 a.m. West Coast time, California. That's where I trade. But it was actually at 7 a.m., 10 a.m. Consumer confidence data that came out. So when the consumer confidence data came out, it caused a spike in the market. If anybody was trading, consumer confidence hit, spike in the market, and I used that momentum to get on my trade. So you can take a look right here. And if you see, this is the 30-minute chart for SPY. We see that first 30-minute chart was relatively normal, especially since it got up to the high of yesterday, and then it kind of rejected. But as soon as the data came out for consumer confidence, we saw that this big spike in the market, as y'all could tell right here, this candle. And so seeing this momentum, this is where I jumped in. I just rode the momentum up. And like I said, this was basically the theme of this week for my trading. It's just using momentum for trades, nothing more, nothing less, really. Just seeing strong pushes in either direction to the upside or to the downside, getting in and out. I'm a scalper. That's the number one way that I trade. So I really, I'm teaching and learning myself swing trading, but my primary style that I lean into is just easy scalping. Like you can see on TradeZella, my average winning trade, I'm in a trade no longer than 10 minutes. But using momentum, using that push forward from the 10 a.m. consumer data, I hopped in and I hopped out. We could take a look at Excel. So today, like I said, it was SPY calls based off the momentum, and I spent $3,000, got a little 3.65% return, and got out. Now, there's a lot of people that kind of question slash give me constructive criticism about how much money I'm putting on the line when I do my trades. And so for me, my overall skill or my overall trading strategy is basically more capital, less greed, less indicators, and ultimately less skill. Basically, look at it like this. If you've got $10,000 to trade with, 10% is $1,000. And if you can average that each day, you're looking at 250,000 a year. No reason to try to go crazy and hit 100% banger every single day to hit 200% or nothing like that. So I'm very conservative with my trading, and it just works out for me because it allows me to be very consistent and it allows me to be very profitable. But we could look at the same thing from yesterday. So I had a SPY put at 7:30 a.m. Now, I got here in my notes on my journal that the signal candle was bearish and indicated that there was going to be a reversal to the downside. Based on the entry candle's momentum and breaking past the low of the signal candle, I decided to take puts. So here I spent about 2,200, almost $2,300. I made 60 bucks, only 2.62%, but we could take a look. So this was yesterday. As we can see, this is the candle right here. I think I'll turn off some of these indicators just to make it not so difficult to see and understand, but maybe that helps just a little bit. But yo, as y'all can see right here, I this was the candle I'm talking about that symbolized a reversal. Let me see if I could turn down. All right. So this candle right here, where the crosshair is what symbolized a reversal. And so when I saw this, and I saw that the next candle, my entry candle at 8 o'clock, pushed below the low, and it broke past the 50%. Well, we didn't know it at that time, but it broke past the 50%, and I went ahead and entered. I rode some of that momentum down, and then I got a rose. Oh, snap. Thank you. I got a rose. But yo, so what I saw was it break past this low of the previous candle, and then I enter based off of this momentum. So, like I said, the theme for me this week with my trading was just riding momentum all the way down, just taking the momentum down, and that's it. So, there's my two trades, both of them today. The momentum to the upside, I'll show y'all for anybody that just joined. The momentum to the upside here, when the consumer data came out, consumer confidence data came out today, Friday, as the market pushed upward and it broke past yesterday's high, I got in calls and I took that on the way up. And basically the same thing yesterday when I saw that it broke past the low on this candle and it was shooting down, I took that momentum. All right, now let's take a look at the next one. So like I said, with roughly $2,000 in the past week, I've been able to make 500 bucks, roughly a 23% return on $2,047 was my average trade. So my average trade for the past week cost me just over $2,000. And if you add up all the profit percentages that I made 23.78%. Thank you so much for the roses. Thank you, Mocha Ray, for the roses. Appreciate you so much. Just breaking down my trades, and basically the theme for this past week was more about momentum than anything. And that's important because a lot of times you're going to have to know when to pivot and understand what's going on with the market. You're going to hear that a lot. I'm not even trying to talk and come at people like I'm the super guru, but I'm understanding it and I'm learning it. So I'm just offering it from y'all to y'all from my perspective, is seeing when the market does change and it might not necessarily line up exactly 100% with your strategy. You just got to be able to change it up a bit. So I'm always trying to constantly get this camera kind of right. But all right, so we went over the first two trades from yesterday or today and the day before. Now on December 5th for Google, I had a call. It was a shooting star and the signal candle was at 7:30. So the entry candle reversed with strong momentum. I pivoted and entered calls. Same thing, like I said, being able to pivot and change with the market. That's how I've been using, or that's how I've been playing it this past week. Everything was about for this past week for me. Let me bring this down so y'all can see it. Everything was about playing the momentum. Everything was about momentum. So we'll take a look at Google on December 5th at 7:30 a.m. West Coast time. All right, here's Google. Let me scroll over. Let's bring this down a little bit. This is December 7th. This was the 6th. All right, here we go. So hopefully y'all can see it. So each one of these candles is a 30-minute chart. That's the primary chart that I trade on. So here is 6:30 when the market first opened in California, West Coast time. Here's 7. And then here is 7:30. Now, almost on this candle right here, which is kind of like a shooting star, giving you indication to the downwards, I almost would have been inclined to take puts. But what we saw on this entry candle, which is the candle that I entered on at 7:30, we saw that there was a strong push upward. So once it broke the high of this shooting star, I entered and I rolled that up. And then I got my calls and I made money off of Google. So like I said, I can't stress it enough. This past week has been a lot about momentum for me. And so just a reminder for anybody that's just joined, basically what I'm showing you is the realistic numbers when it comes to trading. Nothing crazy, nothing like, oh my gosh, it was 500,000% or nothing like that. My average trade for the past week was roughly $2,000 as we changed, just under $2,050. But I've made 23% in profit, just about $500. So yo, what up, QJ? What's going on? What's going on, QJ? Appreciate you joining. But I'm just showing everybody that this past week was about yo. Thank you for the likes. I love it. I appreciate you so much. Thank you for the likes. But I'm going to show you guys again, just for anybody that just joined. I just want to show you guys the realistic numbers. All right. So for the past week that I've been trading, let me bring that right there. My average trade cost about $2,047. My total profit percentage was 23.78%. So just under 24%. I have made $487 this past week trading. So nothing crazy. Now, like I said before, a lot of people will criticize me and say, well, you're using a lot, you're putting on too much size, you're doing too much on your trades for such a little amount. but I trade very conservatively. I don't need to have 100% return. I can aim for 3% or 5% and be perfectly happy. The one thing you want to do when it comes to trading is to get your base hits, kind of like in baseball. You want to get your base hits over and over and over to build your confidence. You don't need to try to hit a home run or a grand slam every time. What you need to do is put points on the board. And so that's why I trade the way that I trade, because it allows me to get many consecutive wins over and over and over. All right. So wanted to show y'all that. Let's take a look. My next one on December 4th was Amazon. My signal candle was at 7:30, which means I entered at 8, and it was a green hammer, and this was December 4th. So let's take a look really quick over here. So on that Amazon trade, I spent about $1,400. As y'all can see, made 1463s for about 45 bucks. So nothing major, but it was still 3%. And so just remember that, like when you're at a stage and you're thinking like, yo, I got to hit it out the park, I got to make all this money, that's the trap. The trap is to get you to think that the only way that you can trade is to hit it out the park, get 100%, 200%, whatever the case may be. And that's not true. All right. So let's break it down. So we're looking at my Amazon trade that was on December 4th. Like I said, this is my journal, and I use two journals. So I'm gonna take a side step right quick. I use two journals. I use both Excel, which is all manual. I type this up, but I also use TradeZella. So you can see that my trades are confirmed here, that I'm just not making up the numbers, because if you're familiar with TradeZella, it hooks up to your trading account. So whether you're using Robinhood or something like that, it uses the API and the data is fed over. So you can't fake this data. But what we see here was that on the 4th, I had two trades. And so we're looking at the Amazon one. We'll go back to the Excel really quickly. So Amazon, I got calls on a green hammer at 7:30 on December 4th. So let's check it out. Let's check it out. Where's Amazon at? All right, here we go. Here's Amazon. Here's December 4th. Here is that green hammer at the bottom of what looks like the market being exhausted. So after this whole dump, right, it started to dump in the pre-market. It dumped aggressively. Once the market opened up, it continued to dump down. And then we got down to this green hammer right here. And I used this as a signal for a reversal. All right. And then I entered on this candle, which you guys see where the cursor is at. Like I said, I didn't get greedy, and that's one area where I could improve. Like they say, you want to let your winners run. I could have rolled it all the way back up here and maybe turn that into a 50% or 100% trade, but I don't need that. I don't need to be greedy when it comes to that. So all I got to do is hop in here, get my target percentage, get my profit, and go. That's the one thing you want to keep in mind when you're trading stocks and you're trading options. Take your profits and go. Because just as easy as the market could give it to you, it could take it away. And now you're sitting at a loss. And I'm very thankful because this first week of trading in December, I've had no losses. All of my trades have been green. I have had all winners, but a lot of that has to do with me not being greedy. Let me just take my $100 here and there, 80 bucks, 90 bucks, and keep it pushing. So wanted to show y'all that. This is my favorite one because this one was actually in alignment with my trading plan. It really wasn't based so much on momentum, quote unquote. So this is why I wanted to really show this. And I'm just showing y'all realistically what's going on with my trading style. So again, just to recap, if you're just now joining, this is what it looks like. This was on December 4th. This is Amazon that I'm showing y'all. I need to get better with this camera angles because this is just terrible. I want y'all to be able to see the full screen. The bottom line is this was my Amazon trade. Whoa. From December 4th. Just a quick recap if you're just joining. There was a slight dump starting in the pre-market. And then when the market opened up, we all can see that it dumped a whole lot on Amazon. We got this green hammer right here. This was my signal, my indication to take entries. And then once this green candle closed, you always want to do that. You always want to wait for the green candle to close, or whatever your signal candle is. Always wait for it to close. Don't jump the gun. And then in this next candle right here, where the crosshair is, that's why I entered. I wrote it up a little bit, took profits, and I bounced. All right, let's check out the next trade. All right, so we went over Amazon. And then again, on December 4th, QQQ, I did puts, which is very interesting because, QQQ and some of the tech stocks, maybe even Amazon. Amazon's like some half tech company, half consumer retail, if you will. But again, like I said, this was a momentum trade. It wasn't even a signal. It was just me looking at the momentum of the market. So it wasn't even a matter of using a bunch of indicators, using a bunch of technical analysis. This was more so about just seeing which way the market is going. Is it aggressively pushing up, or is it aggressively pushing down? And that's what this was about. So this was QQQ. I did puts and I don't have the time. So let's go over to TradeZella. That's what's dope about TradeZella, because even if I miss a bit of information on my manual Excel, my manual trading journal, TradeZella, which hooks up to your trading account, will give you all that details. So right now we're looking at December 4th for QQQ. We'll look at my TradeZella. Let's look at these two trades here. As we can see, we've got the $50 put and the $45 call. I'm going to move it over a little bit so y'all can see it. All right, so like I said, we got the Amazon and the QQQ. Now the QQQ looks to be at 724. All right, now let's go check it out. So we're going to go to QQQ. Here's the QQQ chart, and I trade on the 30-minute chart. For anybody that's wondering, I trade on the 30-minute chart. So if you want to know how I trade, that's my primary trading. I feel like anything under 30 minutes for me personally as a trader, there's too much noise. And anything over 30 minutes, it's not enough noise. It's not enough information for me to make a quick scalping decision. And that's the way that I trade, is a scalper. Most of my trades, I'm in for less than 10 minutes. But going back to that QQQ, on December 4th. Let's go back and check out that momentum for the puts. That's the 6th, that's the 5th, and here is the 4th. So what we can see, yikes. All right, so what we can see right here, this is the QQQ. We'll bring it down and let's take a look. So you see here, the QQQ, just like Amazon on that day, just dumped and dumped and dumped right when the market opened. So when it was pushing down and it was dumping, I just caught that momentum to the downside. That's all I did. It wasn't nothing crazy or nothing fancy. It's just nothing fancy. It's just using the momentum of the market. Obviously, as you learn to trade, you're going to learn about different indicators, different things you want to watch out for. But I'm just showing you guys realistically, it doesn't have to be super complicated. A lot of it is just making sure that you're not being greedy. A lot of it is just sticking to what your intuition is telling you and then just writing it out. So what we can see here, and a lot of these companies, you can see that kind of similar candlestick, the same way that we did with Amazon, where it began to reverse. But I caught this QQQ first in the morning that pushed down, took those puts, made profit. And then when the market started to reverse, that's when I caught the Amazon to the upside. But this is the QQQ. And if you're not familiar with it, the QQQ is the ETF in the stock market that is reflective of all the tech stocks, all the tech companies. So Amazon, Apple, Facebook, Google, companies like that. But if you guys have questions, please drop them in the chat. I want to have this be an open Q&A. Let me know anything that you might be thinking, but we're going to keep it rolling. And just for anybody that just joined right now, we're just doing a recap of my trading week for the past week, or the first full week in December. So Friday to Friday, Friday, December 1st to Friday, December 8th today. I used roughly $2,050 for my average trade. Here is my own personal journal, so y'all can see the average cost for my trades right here was $2,050. And with using $2,050, so for anybody that wants to know how much does it cost to start trading options, things like that, with roughly $2,050, I've got so far a 23.78 profit percentage, and that equates to just under $500. $487 is what I profited. So it's nothing crazy, right? It's nothing like, oh my gosh, but I'm just keeping it real. I'm not trying to sell anybody any dreams. I'm not trying to make you think that you're going to get rich overnight or something like that. It's just an easy way to show you realistically what you can do when you're at the beginning stage of trading options and you're in the market. Roughly $2,000 can get you $500 in a week. So just multiply that by 4 weeks in 1 month. $2,000 could make you $2,000 every month. That's extra money that you can do to pay bills, to do whatever, take the profits, make life easier for you. All right, so we're almost through. So we did my today's trade, we did yesterday's, we did the Google, the Amazon, the QQQ. Now we've got Friday, December 1st. I got an Apple call that I also notated. Let me bring this down for y'all. I got an Apple call that I also notated is based off of momentum. I can't say it enough. If I was to say one word that symbolized or was the theme for this week's trading, it's all about momentum. It was all about momentum for me. So we're looking at my December 1st Apple call trade. I'm going to go over to TradeZella because I didn't record the time. And that's another thing. You have to be diligent. Even I can improve. You've got to be really diligent when it comes to your journal. So that's why I use two. I use TradeZella because TradeZella is going to capture all the information, whether I log it in my journal or not. And then I have my manual journal because as I'm typing things out or I'm writing things out is really going to make me think about, okay, what were my emotions? What was my mentality, my psychology when it came to trading? So right now we're going to check out, this is on Friday. I had two trades on Friday, December 1st, and I made 150 bucks. The first of which, or the one that we're going to talk about right now, is my Apple call that was at 8:28 a.m. And like I said in my other journal in Excel, that was all based off of momentum. So let's go take a look at it. Where is Apple at? All right, let's take a look at Apple. We'll go back to the first. You guys drop your questions in the chat. I want to get your comments. I want to get whatever anybody's talking about so I can help y'all. And you could just learn from me, good or bad. Any mistakes I'm willing to share with everybody because I want you to be able to develop your own trading style so that you can get into the market, get comfortable, and start making money. All right, here we go. So this is Apple. We're looking at Apple's chart. Remember, I used a 30-minute chart. So this is the 30-minute chart for Apple. I entered the trade at 8:28. So it would have been this candle right here. Let's zoom in. I'll bring it in for y'all. So this candle right here was the candle that I entered in. And like I said, I made a notation in my trading journal that I traded based off of momentum, just what direction the market was going. As we can see, it pushed up, it pushed up. I could have stayed in and let it ride all the way to the top, but I don't want to be greedy. Once I get my profits, I hit my percentage, I take it and I go. So that was another trade. And then we just got one more. We got one more to take a look at. Let's go back to the journal. And it is Microsoft calls on the first as well. This was at a 7:30 and the setup was the hangman. Now this was interesting because I potentially stayed in the trade too long with no defined stop loss. So this is my first trade of December 1st, and it was a little shaky. Fortunately, it panned out, but I will admit I didn't have a stop loss on there, and that's something that you want to be aware of. So let's go check it out. We're talking about Microsoft on December 1st. Let me take this out of my ear. All right. So we're talking about Microsoft on December 1st. Y'all, let me check something right now. I just want to check one thing. Where's it at? If we had anybody, hold on. Just want to make sure if anybody joined the Zoom. All right, doesn't look like anybody joined. Okay, but we're looking at the Microsoft trade. I forgot the time that fast. Let's go take a look. And the Microsoft trade was at 8:03. All right, so here we go. This was December 1st. Here is the 7:30 candle. This is the 8 o'clock candle. I saw this hangman right here, the one that the crosshair is on, thinking that it was a signal to push back up or to reverse to the upside. But as I'm learning, the hangman, when it's red especially, is ultimately like a bearish indicator, which is why this entry candle didn't pan out too well. I stayed in the trade, fortunately, and it did reverse back up to the upside. And I was able to make that, what was it, 70 or 80 bucks? Let's take a look. The Microsoft was $70. So, like I said, just using momentum, that was all the theme for this past week. I appreciate all of y'all for rocking with me and tuning into the live. And of course, if you got any questions, y'all can hit me up on the DMs, tap in with me, join my community, Passive Income University. That's where all of the exclusive content is held. I record everything so you can go back to all of my previous lives, all of my trades, and do the breakdowns with me. But I appreciate y'all. Much love. All right. Peace.